This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. Today is edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. We were talking about the balance sheet on today from the USD with Steve Georgey from Allendale Inc. and Sue Martin from Ag and Investment. Keep in here on the Markets Club podcast. We're going to have a conversation on balance sheet on today with Sue Martin from Ag and Investment out of Iowa and Steve Georgey from Allendale Inc. Welcome, you guys.
Nice to be here.
Yep, thanks for having us on today.
Starting with Sue Martin. What is your thoughts on the balance sheet on today? We know that it's 95 million acres with 190 bushel per acre.
Well, I think that when we look at the corn, basically the only change that we had, the 181 bushel per acre yield, that wasn't much of a change. And there wasn't much in the way of changes for the corn, other than when we brought in old crop stocks, they fell by 50 million bushels. But the other thing is the USDA lowered farm gate prices by 15 cents a bushel to 420. So that was a little bit disappointing on the corn. But I look at the wheat market and it was nothing but negative news. Now also Brazil, their corn production went up 4 million metric tons, which was kind of a surprise. So that too weighed a little bit on the old crop corn, but the weight of the wheat market, I think, is tugging corn backwards as well.
How is the technical aspects on the corn markets for today with the balance sheet today, Sue?
Well, when I look at the technical charts, the 442 area was kind of an area of support basis old crop. However, if we were to come down through that 442, the next level of support is 424 to 427. So that would seem pretty tough. But again, we've got planting progress coming out this afternoon. I haven't seen it yet. It should be pretty good. The weather's been ideal and is forecast for this week to be pretty ideal. Farmers in our area are certainly finishing up. And we're seeing a lot of fields up already emerged, and both beans and corn. So, I look at the ratings and they should be good.
Steve, how is the fundamentals on the beans markets with lower acreage in the beans?
Today was a fun one, right? We know some of the fundamentals already. When you get that March acreage number, we kind of carried that through. Acreage number down about 3.6 million acres for soybeans. But today, I guess it was a friendly surprise for soybeans. And when you look at strictly that ending stock number, certainly lower than what the average trade guess was looking for, 295 million carryout, well below the 350 million carryout we have for old crop right now. So we're talking about some friendlier numbers from the balance sheet. And kind of as Sue had mentioned, right, and you look at what's maybe coming ahead, planting progress, we're well ahead of pace for planting progress. But not only that, it's also what are we doing now with weather? This Thursday, we're going to see new weather models from NOAA. So you're going to have new models coming out with a stretch over June, July, and August. And so we get past that, the middle of May. Seasonally, we start looking toward that summer weather. And with tighter numbers right now, and potentially maybe some drier bias in certain areas of the Corn Belt, that may stir up some friendlier markets right now for soybeans, and we certainly saw that today.
How is the beans planting progress in central Illinois and northern Illinois, Steve?
Bean planting progress has been fantastic. I mean, I think planting progress for us has been pretty good. Overall, we had some rains last week, but looking at things moving forward, it does dry out a little bit. Guys are going to get stuff finished up. I took a drive up into Wisconsin, northern part of Wisconsin. My daughter goes to school there, and uh, everything you could possibly see, well, not everything, but most of it's planted as well. So things look good, and we are seeing some emergence out there as well. So right now, you can't really argue on things. It looks pretty good around here.
We will see for next big report on the end of June. But what about the technicals buying in the grains market, Steve?
The technical buying here is that typically for corn and beans, you tend to get this low in this point, and you start getting more of a summer bounce. Are we in that kind of feel right now? I think we're going to have to take a look at that weather report on Thursday. But when you look at planting progress, things look good. But the technical bounce that you could end up seeing for soybeans today, we closed above the 200-day moving average for that new crop bean contract. And you get a couple consecutive closes there. That 1070 to 1080 area becomes your first upside objective. But then even above that, you've got a head and shoulders potential low there for soybeans on that new crop chart that could bring us back up near that $11 mark. Now, you can argue that if you look at where things are right now with the balance sheet, if things do get tighter and we do start going into more of a summer type problem or an issue, that may spur some more buying here as we get through that. But looking for some short-term technical areas, that 1070, 1080 area is one level, and then that head and shoulder objective near $11.
How about you? What is your thoughts on technical, Sue?
Well, I look at the bean market and I agree with Steve. I think that this market does have still more upside potential to it. And one thing I note is that the USDA raised farm gate prices 30 cents a bushel from 9.95 to 10.25. So that too was a little bit of an optimistic push. And I agree. I think weather's going to start to come into play here after we get past this report. And we also got to keep in mind we're to have and the EPA is to announce a final agreement here as to what we can look for in a policy for the RVOs and the RFS. And if we get that, we're going to need, with the supply that tightened here today on these numbers, we're going to need possibly beans in our country to be able to process for the bean oil. Depends on where that number falls. This past year, what was it, 3.375 and million gallons or billion gallons. But, if it comes out, the trade is looking for 4.25 to 4.475 billion gallons. But what if it comes out around 5? That really, it could ignite this, not only the bean oil market, but it could ignite that bean market and the new crop. It would just put more importance with less acres and a bigger demand potential domestically. It could set us up for a huge market that could surprise us if Mother Nature isn't so kind with weather.
Can you explain to us about the RVO, Sue?
Well, that's for your bio aviation fuel standard for jet fuel and also biodiesel. You've got, and then of course the RFS, the ethanol, what have you. So, it's a mandate of how many gallons we gear up towards to produce in the US. And right now, we were to have had a program already last November, and then it got delayed. But now they're saying out of the USDA and the EPA administrator said we would have something before June 1. So we're in a countdown of time here. This week will be mid-May and we're in a countdown of time. So some positive potential here that we're looking at right ahead, along with the potential of weather. Our weather sources are saying that June's going to be pretty warm and dry, and as well as possibly July. But then by mid-August, I think it's interesting if they're for.
How about you, Steve? What is your thoughts on the feeds on the corn?
Yeah, Sue, I absolutely agree with you. I am, I'm nervous in the cattle market. I'm very nervous on a lot of this stuff. But the cattle feed side, just to kind of throw a little extra caveat into this too, what USDA did on a feed side today, and we just to make that kind of clear, they increased this feed and residual today on the balance sheet. So they increased feed and residual by 150 million bushel. So we know there's less cattle, right? We already know that. We know that we may start to see expansion as we get into late next year as we start to slowly see cattle retention. But the bigger thing is, though, is that they increased feed and residual by 150 million on this sheet. Some of the expectations, though, today were that we could see a tighter number on feed and residual. Well, they didn't. They ballooned it. And so I don't believe that it is from the cattle side. I had to explain this, and we did a deeper dive on that. It's probably from the hog and poultry side. So when you look at that from a corn balance sheet standpoint, feed and residual did go up 150 million bushels. So pretty neat there. But overall, when you look at that cattle market, Sue, I'm right there with you. I'm nervous. I think if you've got opportunities to get some cattle sold, push these cattle out, enjoy these high prices, because it does make me nervous what happened there in 15. Can we see something like that again? I don't know. And I don't know when. I don't know how, but I can tell you that we end up falling faster than we rally. And
You
right
know,
now, this rally's getting a little out of control. And so it is one of those things where we're starting to see the futures market slow down versus the cash. You got to take note of that. And that's where we're kind of at too. So I definitely agree with Sue on that side of it, and certainly, think that you should be taking some action here from a cattle standpoint.
and one other thing, Caesar, when I look at the corn, look at how they upped it 150 million bushels,
Mhm.
but look at the price of wheat. The price
Yes.
of wheat is so dirt low,
Yep.
over $2 a bushel below cost of production. I would have to think, especially in the cattle industry, we're going to see a feeding of wheat versus corn.
Yeah, we saw the August feeder is up to 300 for today. However, we will see. What is your final thoughts about the corn markets, especially with the old crop? Steve Georgey.
Old crop right now, I think my final thoughts there really, uh, we know as that balance sheet actually gets a little bit tighter, right? Just over a 1.4 billion carryout. It's one of those things where we now have to look, and we've said this before, but you've got to now start looking at weather, right? If this weather does turn out, just like Sue was saying, right? It's June a little drier, August or the June, July a little drier, whatever it has to be. If we start seeing a tighter balance sheet here, even for new crop, where we start talking about this, the yield numbers tightening, what you end up getting is more of this friendlier bias for old crop, just because we don't know how new crop is going to turn out yet. And so when you have that, the mentality is that even for cattle feeders, I just want to make sure that I have my feed needs already bought, because I'm not sure if I'm going to have it later. Or if you've got old crop sitting below, this 450 area, I might as well lock it in now, because if we do see tighter ending stocks coming in this new crop, we could be a heck of a lot higher as far as price. And so that mentality starts to do that. There's a point though where I think we do need to watch weather, and I think weather can be very important as far as this old crop. The balance sheet is tight. I'm going to say tighter, but it is, when you look at that, where should we be relative to that carryout number? We feel that we probably should be a little bit higher than where we're currently at. But just like Sue was talking about, you've got to be kind of wary of those charts. This 440 area is one area. If it drops, you're talking 425 again. And it's one of those things that it could happen very quickly. But seasonally, we get into a time frame where we do get a rally for corn. I think the weather could play a bigger component of what could happen here as we move forward. And we'll see those new weather models out here on Thursday.
How about you, Sue, quickly?
Well, I agree with Steve. And the thing that we got to keep in mind is that the old crop corn, over 83% of it's already sold out of farmers' hands and has been. Now, the commercial didn't feel such a need to have to bid up for corn because he had such a control of a large amount. But that then says if we start to see a weather shift here where we start getting nervous, they may try to have to bid for the rest of that old crop. Because if we start seeing a weather issue, farmers aren't going to sell. They're going to lock it down and hold on to see if they don't get something better than where the prices are today.
Thanks, you guys.
Thank you, Cesar.
Cesar, thank you very much. Sue, it was great being on with you too.
Yes, nice to talk with you. Tell your dad hello.
I certainly will. Thank you very much.
You bet. Bye-bye.
That's Steve Georgey from Allendale Inc. and Sue Martin from Ag, an investment on the Markets Club podcast. Okay. Thanks to Steve Georgey from Allendale Inc. and Sue Martin from Ag, an investment. This has been the Markets Club podcast. I'm Cesar Delgado. You have a good day.